The 2017 bull run and market mania. By 2017, cryptocurrency had evolved from a niche technological experiment into a global phenomenon. Bitcoin, having survived early halvings, exchange collapses, and years of volatility, was ready for its moment in the spotlight. The stage was set for an extraordinary financial spectacle, the 2017 bull run where Bitcoin and altcoins skyrocketed in value. Mainstream media coverage intensified, and the world caught a glimpse of the power and peril of digital currencies. Early 2017. The calm before the storm. In January 2017, Bitcoin was trading around $1,000. It had recovered from the 2014-2015 crashes and stabilized. The ecosystem had matured. Exchanges were more robust and global. Ethereum's smart contracts had inspired hundreds of ICOs. Altcoins were proliferating, creating new markets and trading pairs. Public awareness was increasing thanks to tech blogs, forums, and mainstream media. Yet for many, cryptocurrency was still a curiosity, a volatile digital asset far removed from traditional finance. Few predicted the storm that was about to hit. Bitcoin's meteoric rise. From early 2017, Bitcoin's price began accelerating. March 2017, $1,200, June 2017, $3,000, September 2017, $5,000. By December, Bitcoin reached an all-time high of nearly $20,000. The surge was fueled by several factors. Scarcity and halving anticipation. Investors remembered the lessons of the 2012 and 2016 halvings. Bitcoin's limited supply and predictable issuance created confidence in future value. Mainstream awareness, media coverage intensified, bringing new retail investors into the market. Headlines in financial newspapers, TV shows, and online platforms amplified hype. Global speculation. Investors in Asia, Europe, and the US rushed into crypto, seeking quick gains. ICO frenzy. Ethereum-enabled ICOs introduced hundreds of new tokens, increasing demand for ETH and Bitcoin for trading pairs. The bull run was not just a price movement, it was a global cultural phenomenon, capturing imaginations across continents. Altcoin mania and ICO explosion. While Bitcoin led the charge, altcoins also soared. Ethereum climbed from $8 in January 2017 to over $700 by December. Litecoin, Ripple, XRP, and dozens of smaller tokens saw exponential growth. ICOs became the new frontier of speculation. Projects promised revolutionary technology and huge returns. Retail investors poured in without traditional due diligence. Exchanges scrambled to list tokens, creating new trading opportunities. This speculative environment created parabolic price movements, often detached from fundamentals. Psychology, fear of missing out, FOMO, drove millions of people to buy into markets that were unfamiliar, volatile, and largely unregulated. Media frenzy and public hysteria. 2017 saw an unprecedented level of media attention for cryptocurrency. Financial outlets ran stories of early adopters becoming millionaires overnight. Social media amplified hype, with influencers and enthusiasts promoting ICOs and altcoins. Mainstream investors, previously skeptical, suddenly took notice. Bitcoin became a cultural icon, representing wealth, disruption, and the promise of a new financial system. For some, it was a revolution. For others, a speculative gamble. Exchanges under pressure. Exchanges, the backbone of crypto trading, were overwhelmed by the surge. Platforms like Coinbase, Binance, and Bitfinex saw record trading volumes. Websites slowed or crashed under high demand. Withdrawal delays and transaction backlogs became common, frustrating users and exposing infrastructure limitations. The bull run highlighted that while cryptocurrency could scale in theory, practical infrastructure needed rapid innovation to keep up with global demand. Psychology of the 2017 mania. The 2017 bull run was as much psychology as economics. FOMO, Fear of missing out. Retail investors entered at the peak, chasing fast profits. Herd behavior. Prices surged as more people bought, creating feedback loops. Speculation over fundamentals. Many altcoins had little technical or practical utility, yet their prices soared purely based on hype. The market became a reflection of collective belief rather than intrinsic value, a defining feature of speculative manias throughout history. Regulatory response and global attention. Governments began paying attention as ICOs and trading surged. China banned ICOs in September 2017 and restricted domestic exchanges. South Korea introduced regulations to prevent money laundering and protect investors. The U.S. SEC began investigating ICOs for securities violations. While some regulators warned about bubbles and fraud, others recognized innovation. These early interventions foreshadowed the ongoing tension between decentralized finance and regulatory frameworks. The price peak and FOMO frenzy. By December 2017, Bitcoin had reached $19,720,000, with Ethereum surpassing $700. Exchanges were jammed. Social media was flooded with stories of rapid millionaires. The frenzy was global. Retail investors borrowed money to buy Bitcoin. Families pooled savings to enter ICOs. Stories of overnight wealth circulated widely, creating a fear of missing out epidemic. Yet the higher the market climbed, the more fragile it became. The inevitable crash begins. After reaching its peak, the bubble began to unwind. January 2018, Bitcoin dropped to $13,000. February 2018, $6,000, $7,000. Altcoins lost 80–90% of their 2017 value within months. The crash revealed the dark side of mania. Retail investors suffered massive losses. Over-leveraged traders faced liquidations on exchanges. Media shifted from glorification to warnings of fraud and volatility. The 2017-2018 cycle mirrored historical bubbles: exuberance, overextension, collapse, and eventual stabilization. Lessons from the 2017 bull run. Volatility is intrinsic. High returns come with high risk. Speculation can detach from fundamentals. Many investors lost sight of long-term value. Exchanges are critical infrastructure. Failures or bottlenecks magnify market stress. Globalization amplifies market psychology. News, social media, and FOMO accelerate both booms and busts. Regulation is inevitable. Governments began taking cryptocurrency seriously, shaping future adoption. Despite the crash, cryptocurrency survived the mania. The ecosystem matured, infrastructure improved, and awareness reached new heights. Cultural impact. The 2017 bull run left a lasting cultural footprint. Crypto became a mainstream conversation topic. Millionaires and losses alike became part of pop culture. Entrepreneurs were inspired to build new projects, exchanges, and platforms. The mania demonstrated that cryptocurrency was no longer just a technological curiosity. It was a global financial and cultural force. Conclusion: from boom to maturity. The 2017 bull run was a defining moment. Bitcoin had proven its scarcity and global appeal. Ethereum demonstrated the power of programmable money. Exchanges and ICOs expanded access, innovation, and speculation. Investors, regulators, and the public experienced the highs and lows of cryptomania. While the bubble burst, the ecosystem emerged stronger. Infrastructure improved, communities grew, and the foundations for the next era, institutional adoption, DeFi, and mainstream integration, were set. The 2017 mania was a lesson in human psychology, technology, and finance. The world had glimpsed the power of cryptocurrency, both its promise and its peril.